Hey guys, what's up? Alec back with the daily stock market, and look at that. We had an overall green day in the stock market on Friday. Also a strong green day for many individual stocks such as Rivian, Enphase Energy, Roblox, Nvidia, Square, Neo, Netflix, some of the leaders and outpacing the market as a whole. This video, I know you guys want to hear about your dividend stock, so I'm going to bring it to you. We're going to be going over 3 to 5 of the best dividend stocks in the stock market right now. So make sure you're subscribed with post notifications on, like this video, share with a friend because you know it's going to be an absolute banger, and let's dive right into it. And the first one, we're starting off hot with Verizon, ticker symbol VZ. Okay, $37 per share. If you've been subscribed anytime in the last year, you know that we've been talking about them since valuations have become a little bit more attractive in October, around $35 per share. Even under $40 per share, I think is a good place to dollar cost average into for Verizon for long term. And remember, this list is for dividend stocks, so it's not going to be high growth. You're not going to see hundreds of percent growth. But if we see a 30% growth or even a 20% growth on Verizon over the next 12 to 24 months, I'll be extremely happy. Because remember, if we scroll down and we look at that dividend yield, the main talking point of this video, we can see that Verizon's paying one of the largest dividends at 6.98%, basically a 7% dividend yield at the fair valuation of a Verizon stock with a market cap of $156 billion. So for Verizon, that's a very fair price. The price to earnings ratio also, by the way, is 7.2, implying that it is a great deal. And they're a worldwide company. Most people, you probably know, either have Verizon or AT&T, so they definitely have a competitive, durable advantage. The question is, can the stock get to around $50 per share once again? So we'll dive into it a little bit deeper because, yes, the dividend yield is important at 6.9% per year. But remember, it's not only about the dividend yield when you're talking about dividend stocks. You also want a stock that's the price of the stock is going to go up over time as well. So you get an appreciating stock, you buy it at 37 and you hold it until around $50 per share, for example. And on top of that, you get a bonus dividend. So remember, think of the dividend yield more as a bonus. And don't forget to look at the underlying company that is the dividend stock. Don't just buy a random dividend stock just because the dividend yield is high and you know nothing about the company. Also, Verizon is close to a 5-year low right now, so it could be a good time to be picking up shares. Let's dive a little bit deeper into it. Okay, so here we have Verizon's income statement pulled up. We have net income pulled up, first of all. In the last 5 years, it's been pretty consistent. Okay, so it hasn't been changing much in the last 5 years for the stock to be down as much as it is and to be at a 5-year low. So that's the first thing to consider, is that the net income's looking pretty good year over year. On a quarterly basis, it's also looking fine. It's not looking the best. Obviously, we want to see more growth, consistent growth quarter over quarter, but it's not looking horrible. At least they're a positive earning company. And in Q4 2022, they bounced back with a 41% growth to $6.7 billion net income in just one quarter. Okay, so if we look at total revenue, same story. It's pretty stagnant, but it's not going down is the most important thing. So they look like a pretty stable stock. If we scroll down in the last 5 years, we can also see that the debt to asset ratio has pretty much remained unchanged. Actually, in the last 5 years, it is better. Okay, it's closer to 75% debt to asset ratio compared to 79% 5 years ago. So if anything, it's a better deal than it was in 2018 if we are considering the balance sheet, if we're considering the total revenue, and if we're considering net income. So all around, it's looking like a good buy at a 5-year low. If we look at what analysts have to say about Verizon stock, we can see on average they have a price target of around $44 per share, which would be a 19% upside in the next 12 months. Some analysts have them as high as $64 per share, but some analysts have them as low as $37 per share. So the risk versus reward seems heavily favored in the reward side, and the risk seems very low. And it seems like that Verizon's not going to go much lower than $35 per share. Here we can see where some of these analysts are coming from. where the $64 price target came from. Ivan Finseth, which is a 5-star analyst, and he put that price target just 1 month ago. So overall, I think that Verizon stock is one of the best dividend stocks out there at the current price and at the current dividend yield it's paying right now, which is around 7% on the dividend yield. And the stock price is only 37% on an amazing company with a great compatible, durable advantage like Verizon. Okay, the next one we're going to be talking about is not a stock at all. It's actually an ETF, and its ticker symbol SPYD. It is the S&P 500 high dividend yield. It's just like ticker symbol SPY. However, this one's focused more on dividend stocks, so it's a great one. In the past week, it's up 3.5%. In the past month, it's up 6.4%. And in the past year, it's been very choppy, not moving much. It's flat on the 5-year chart, so it could be a good place to start dollar cost averaging. I was buying pretty heavily when we had that big dip around $25 per share. I've been dollar cost averaging into this ETF over the last 5 years, so my average cost is probably closer to $32 per share overall. So right now is not a horrible time to be dollar cost averaging. We saw highs of $44 per share. It'll definitely get that high again. It just depends on when. If we scroll down and we can see what's in this fund, the sectors, we actually have a lot of real estate in this fund. We have 22% real estate, 17% financial services, 13% utilities. And if we go over to the top 10 holdings, we can actually see that 15% of the fund is covered in these stocks that you see on the screen, 1.6% in Ford, and then other energy stocks and real estate stocks that most people don't really know about. So yes, this one is a little bit more risky. And what I've noticed from holding this one is the ETF price doesn't really gain like crazy. Okay, so if you're looking for huge growth in the underlying asset, which is ticker symbol SPYD, then this probably isn't going to be the best investment for you, because as you can see in the last 5 years, the ETF price hasn't budged at all. It's 5 cents higher than it was 5 years ago, with an all-time high or a 5-year high of $44 per share and a 5-year low. If we don't count that, whole pandemic era, which we definitely shouldn't count it, then the 5-year low is closer to $35 per share. So it's a ETF that's not going to move much. It's going to be pretty stable in price, but the dividend yield is a nice 5%. And every 30 days, they typically update the dividend yield. So that's why it says 30-day yield, even though it's 5% per year. So let's make that clear. Anytime you see a dividend yield or anything like that, it's talking about yearly. Okay, so dividend yield, it's always going to be yearly. 5% per year on this ETF on the dividend yield alone. Okay, and that changes all the time. It changes very frequently, could change every 30 days. And the payouts, by the way, every stock, every dividend stock and dividend ETF is different. They don't pay out once a year. They can pay out once a quarter, and some even pay out once a month. Okay, and that doesn't mean you're getting 5% a quarter or 5% a month. Remember, it's always 5% per year, no matter what. They just divide that up to more frequent payouts instead of just like one lump sum payout at the end of the year. And if you've been a subscriber of my channel, you know I've been talking about Verizon and SPYD as some of the best dividend stocks and ETFs in some of my past videos. But a new one to our list is going to be Target at $132 per share. And why this one is on this video is it's down 20% in the past 3 months alone. It's at a 52-week low of $132 per share. A 52-week high, by the way, is closer to $181 per share, and it made that high in February 2nd. It also came close to that high on November 15th, and then once again also in August 17th, 2022. We can see that it looks like it had about a triple top here, and then it ended up plunging down to $132 per share. Okay, in the 5-year chart, this is one of the lowest prices in the last 5 years. 2019, yeah, it was closer to $110, $115 per share, but we're not far off from those prices. So dollar cost averaging into Target right now could be a good place to put some of your money. I'm definitely considering them myself. We also have a dividend yield of 3.28%. So they're not the largest dividend yield in the world, but obviously the underlying asset is why it made this video, is because it's Target stock. It's not just a random dividend stock that's not going to grow at all over the next few years. Target could easily get back to new all-time highs around $200 per share. And even if Target was able to just get to $200 per share, that would be a 50% gain on the stock price, with a little bit of a bonus of a 3.28% dividend yield over the next each year over the next few years that you're holding. We can also see another good thing about Target is that they are increasing their dividend to $1.10 per share that you own, which is awesome to see a company that is raising its dividend yield consistently. Okay, so let's look at Target's financials. The first thing we have pulled up is the income statement. We have total revenue pulled up first on a yearly chart, and let's compare to 2020 because that's pretty much where the stock price is right now. So we see growth from 2020. Actually, every year we see growth. We see about 3%, 19%, 13%, another 3% in total revenue growth. Let's look at a quarterly chart. We also see what appears to be quarterly growth on revenue every single quarter. If we go back a little bit further, however, it seems pretty stagnant around that $23 billion range. If we go back to 2020, though, it looks like they were around 18 billion, 23 billion, and nowadays they're closer to that 25 billion. So it seems pretty stagnant on that total revenue. So it shouldn't warrant a huge drop in the stock price like we have seen. Let's look at net income. Okay, that's probably why the stock has dropped, because look at that net income in 2022, 6.9 billion in net income, and it dropped 60% in the most recent year, 2023, to 2.7 billion on their net income, which is very sad to see because that was their net income in 2019. Okay, so that's obviously the red flag with Target and the risk with Target as well. We can also see one quarter in 2023, Q2, we were actually close to being in the red, a negative earning company, which would be a huge red flag. So you really have to believe in Target's net income story right now, because right now net income is what's holding it back tremendously from the stock price going higher. So if they get their net income back in line, which they definitely can, they did it in 2021, 2022. They just have to get it back in line in 2023 for the stock price really to start soaring higher, closer to the $200 per share mark. Okay, but what we can see in the last 4 quarters from that very low bar you see there, we see consistent growth in the last 4 quarters, which is a very, very good thing, an important thing to be seeing. Here we have those 4 quarters pulled up. We zoomed in and we see that orange line going up into the right, which we always want to see that growth over time. So that's a good sign. They really just need to keep it up at this point. Now look at those assets to liabilities. It's not much of a red flag to see, Target at 78% debt to asset ratio, because we basically have seen that over the last 5 years. And if we go back even further, they've always really had around the 70% debt to asset ratio. Now, if we get into that 80 territory, 81, 82, 83, that's going to be a little bit concerning to see it keep going higher and higher. We really want to stay closer to where it's been in the past few years, and we would like to see that debt to asset ratio even closer to 72, 76, 74, somewhere in that ballpark to be a comfortable and confident investor in Target stock. So what do the analysts have to say about Target stock? We can see that on average, it's a $174 price target analysts have placed on Target stock over the next 12 months. Should be around $174. According to the average of all the analysts, on the high end, we have $220 per share, and on the low end, we have $130 per share, making the risk versus reward very favorable for Target as well. Remember, we like stocks that are very low risk, high reward. That's what we're all about, low risk, high reward. And Target is another one of those stocks. Even according to analysts, they don't think it's going to go much lower than $130 per share over the next 12 months. And most analysts think it should be around $174 per share. So if we scroll down, we can see where these analysts are coming from. We have a Bank of American securities analyst, 4.5-star analyst with a $145 price target on target over the next 12 months. That was reiterated 5 days ago. We have a Goldman Sachs analyst, Kate McShane, with a $185 price target over the next 12 months. He just reiterated that 12 days ago, or she reiterated that 12 days ago. If we scroll down, we can keep seeing where these analysts are coming from and the price target. We have a top 25 analyst here, Scott, and his price target is $137 over the next 12 months. So it's interesting to see where these analysts have their price targets at. They're basically scattered all over, but it's nice that it gives you an average, and you can see that average is $174 per share. I would be even happy if Target hit $150 per share over the next 12 months, honestly, especially with that dividend yield it's paying also. So thank you guys for all the love and support you show on each and every video on YouTube and Instagram. If you want to join my close friends list and see exactly when I'm buying, what I'm buying, if you're an option trader and you want to see expiration dates, strike prices, when to buy, when to sell each contract exactly, go ahead and click on success number 9, click on success number 8, read through some of these positive testimonials. Great trading month so far. Private group, DM me to join. Over 96% gain in the past month, $8,000. Thanks a lot, Alec. This is since I've been joined on the Insta Close Friends list and Discord. And you could read through some of these on your own time. There's over thousands and thousands of positive testimonials now at this point. So read them for yourself. DM me on Instagram to get more information. If you want to see my website, check out my website. DM me for more information, and I'll love to help you out and get started and make some money with the stock market. So guys, share this video with a friend if you think that they will find it helpful, or if they're a dividend investor. Like this video, make sure you're subscribed on YouTube with post notifications on, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.